Hello everyone and welcome to your Onchain update for the 24th of October. So I want to look at a few different angles today. Miners, activity and exchanges. We actually have HODLers in there as well, but here we are. Anyway, I want to look at these different entities just to kind of give a bit of a broad scope, a bit of an assessment, somewhat of a bull versus bear case, because there's a few elements on both sides of this equation. But really just exploring what's going on a few different areas. And we've talked about how there's low volatility. That generally doesn't stick around. What are some of the things that could potentially turn that equilibrium into something new, right? So generally we need some kind of catalyst to kick things into gear. So really what we're looking for here is what could that catalyst be and where could it come from? So as I mentioned, we're going to look at on-chain activity. We're going to look at miner capitulation V2 because we've been through season 1 of this and it looks like we may be on the verge of seeing season 2. We're going to look at exchange flows, which remain quite interesting and essentially link in with HODL supply. So those two, you'll see that these two will generally sit in pairs. One is giving a bit more of a bearish case and the other one a bit more of a bullish case. So let's jump into the action. So this is my favorite metric at the moment. I'm a big fan of it. I think it's a really, really simple construction. I think it makes a lot of sense. What we're looking at here is what I'm calling new address momentum. Now, what we're looking at is essentially new addresses, right? So new addresses coming in on chain looks much the same as active addresses. And if you can actually subtract out from non-zero balance addresses and obtain destroyed addresses. But anyway, let's not get into too much of the nuance. The red curve is basically showing the monthly moving average. Blue curve is the yearly moving average. Now, what do I want to see for a bull market? Well, I want to see the red trading above the blue, right? Very, very simply. I want to see the monthly activity being at a faster rate than the yearly because that shows network growth. There's more people coming in. It's more exciting. There's more happening. Beautiful example here in January where we essentially broke up and above and away the thing goes. So, and you can see that it generally stuck above that for the great majority and dived down below. Now, we are currently butting heads with the bottom end of this. We looked at this the other day. So this is the same metric that we looked at in terms of those signals. But really what I want to see is can we get up and above this level? So anything above about 400 or 410,000 addresses a day on the new address basis, 30-day moving average, would be a good sign. It would essentially get us up above the yearly. You can see this actually has a lot of semblance to what we had back here in 2018. We did, in fact, butt our heads against it just before the sell-off. We also did it and successfully made it through at the bottom. So really, we're waiting to see what happens here. And again, some kind of catalyst, good or bad, could actually be the thing to actually trigger this thing to move forward. So this is kind of one I'm really paying attention to quite closely. I think it's a really cool one to just keep in track over the coming weeks. Because essentially the way that this thing breaks and holds, I think will be kind of important as we move forward. So I mentioned the non-zero balance addresses. This is essentially that long-term macro growth. Are we seeing more addresses coming in on chain? Now, let me just turn off these net position changes to keep our message nice and clean here. As you can see, this thing generally likes to trend higher. It goes through some periods of stagnation. During this bear market, we can see there was stagnation during 2018, likewise. Now, following the capitulation, this thing started to move higher. That's essentially giving us a forward look to say the market, even though price is nasty and we've traded down another 50%, people started to get more excited come January, February, and things started to push higher. Now, we have traded sideways for a handful of weeks, but have started to push higher just a little bit. So we're kind of in a period of stagnation. I'm not ready to call this thing an uptrend yet, but alongside that new address momentum, if these two both start to break higher, that would be not too bad. At the moment, we have to keep our bearish bias because we haven't got the upward signal yet, but both of them are looking not too bad. Now, when we look at this particular model, this is looking at that on a net position change. I've got this into percentage terms. What is fascinating is note how there's basically no signal for the last 2 months. Really, since September or late August, there's been absolutely nothing. This is really showing just how stagnant it's been. And really, we haven't seen this level of stagnation in some time. So again, keeping those bear market goggles on because right now, this is not the most exciting metric. It has the potential to reverse, but it is absolutely not there yet. So I would put both of those metrics into the more bearish camp than not because, growing network effects is good, right? Even though it can take some time to play out, you can see all this green resulted in a bull market, but it took some time to get there. we are not there yet. So we're kind of sitting in this, stagnant phase of there's just no one else coming in as reinforcements. And even further adding to this, this is our total transfer volume on a USD basis. And we've essentially broken down not to cycle lows. We were lower here in May, June, July. But as you can see, it's nasty. We are down below where we were back here in 2017. We basically came up, not quite, but we came close to touching this level back here in 2019. But we are essentially back down to December 2020 levels. This is the same for a lot of these types of metrics. So, there's just not many people settling value on chain. It really is dead quiet, very, very quiet out here. And again, I'm going to put this one into the bearish category because, more people using the network is going to be good for Bitcoin. Fewer people, not so great. So now moving over to the mining space. So as we can see, it's a bit of a ghost town on chain. That's the usability or utilization side of the equation. Now let's look at it when we come to the mining space. Now, why this is important is difficulty just punched to yet another all-time high. I feel for the miners. They're getting absolutely smoked. They're having a really, really hard time right now. The difficulty price is currently sitting at 19,300, which is essentially exactly the same as our current spot price. So the miners are now, as difficulty winds up, our estimated average miner is now at break even. You can see we're starting to get to the point where there is basically no juice left to squeeze. And we have seen this before back in 2018. Now, I don't necessarily believe that this has to happen where we trade below it for 3 years, because this is essentially an estimate of the average miner. And mining cycles do change, right? We have to take into consideration the different dynamics, but nevertheless, high probability that miners are now extremely stressed. Let me bring up our hash price just to really iterate just how severe this actually is. The hash price, which is essentially the amount of revenue per hash, is now at all-time lows. 66,500, right? You can see that we've pushed down to this very, very low level. Price up here is 19,300. We are back to levels that we were post-halving back here in 2020 when price was 10,700. So price has almost doubled, and yet the hash rate has increased to such an extent that they're now actually earning all-time low revenue. So it really shows you that miners are seriously squeezed. Their revenue is just literally all-time low. So, on a relative basis, they must be squeezed, because if they haven't been squeezed right now, they probably haven't been at any other time in history. So, highly probable that we have some kind of risk of a, expulsion of their treasuries. So now we're going to try and gauge how big that could be. What I'm looking at here is the miner balance, and I've subtracted out Potoshi and what we call other. These are unlabeled miners. And to give you a bit of context, Glassnode's labeled somewhere on the order of 95% plus of miners. And we can essentially gauge that based on who's winning the blocks. If you win 10% of the blocks, you've got 10% of the hash power. How many blocks come in from miners that we've labeled? And it's about 95%. So anyway, what we're basically seeing here is the miner balance, which you can see went through a pretty significant shift in 2019. They moved into an accumulation phase. But note here, before Luna, up here at 40 to 30,000, somewhere in that 40 to 30,000 realm, miners start getting a little bit stressed because their behavior pattern changed to stagnant. They stopped accumulating coins and started essentially just operating whatever they were mining, they were selling. So you could argue that up there at 30 to 40,000, miners started to get a little bit nervous. Doesn't mean they were necessarily stressed or their income streams were, they have to sell everything. But clearly their behavior changed, that they weren't liquidating their treasuries. So they weren't under extreme stress, but they were under enough stress that they were selling a lot more than they were hodling. So there was a behavior change up there at 30, 40K. So at 18, 19K, we are now at a position where there's about 78,000 BTC. That's sitting in these treasuries that could be liquidated. This is $1.5 billion. Now, I'm not too concerned about this, but $1.5 billion starting to get sold, right? Even if they sold half of that, it's non-trivial money. And we're talking about fairly illiquid order books right now. There's not much trading volume. Things are back down to 2020 levels. So really, if we started to get this kind of selling, this could kind of be a catalyst, right? If we're looking for catalysts, it could flush us lower. Miners actually getting extremely stressed, which I think is the case, and having to liquidate parts of their treasury could be that final flush out. So in terms of catalysts, a lot of people talking about it. I'm not kind of, saying that this is going to be it. It certainly could be, but it's just one more thing in the kind of bear camp. We've got miners on the edge of another capitulation, and on-chain activity, which is kind of a proxy for demand, is all looking a little bit sad. So what I'm seeing here is sell pressure, forced sell pressure into illiquid books is probably the take-home bear case right now. That is essentially what I see as being the primary reason that we would flush out. Illiquid books, some kind of catalyst, some forced sellers, and to be honest, I kind of view that to be that would probably be the capitulation. I suspect that wick would probably get picked up pretty quickly, but anyway, we will find out. Can't predict the future. Now, onto some exchange balances, and this is actually moving into the more bullish case. One thing that's fascinating, this thing is just on a relentless downtrend. We are now pushing down to, we've essentially erased, you can see if we come back here, this is January 2018. Every single coin that's ever flowed into exchanges since 2018 has now been fully reversed and sucked out of exchanges at, not quite 10x, but 5 to 10x the price. People who say that there's no demand for Bitcoin are just factually wrong. This is showing an enormous amount of demand for Bitcoin. And even as we get to this point here, 42,000, I think it was, coins came out of Coinbase alone this week. Now, those coins are going into some kind of institutional custody solution. So there is demand for this thing. It is large. I mean, 42,000 coins is not a small change. If you actually think about it, that's 50% of the entire miner balance we just saw. So the demand is there, and it appears willing to be patient, sitting down here at 19 to 20K. And what I want to show you in the next couple of charts is things that actually reinforce that view. I think there are some patient and very, very large buyers who are just letting their orders get filled. I think this is what's going on. But let me explain that a little bit further. So anyway, exchange balances, relentless downtrend. We're pretty much at, January 2018. We're essentially starting to carve into the 2017 bull run now, which is kind of remarkable. Now, at the very same time that we have coins coming out of exchanges, which, by the way, this orange barcode will not appear when BTC plus ETH is flowing out on a 30-day basis. So this is basically a binary indicator. It's orange if BTC plus ETH is going in, right? We have an inflow on net of value, USD denominated value into exchanges. So right now we do not have a USD denominated inflow over the last 30 days. So we are seeing coins being withdrawn, signal one. Now this oscillator here is then saying, let's say we've got $1 billion worth of BTC plus ETH, right? Combined, I just look at the two majors. We've got $1 billion of stuff flowing in. How much is flowing in terms of stable coins to buy that, offset that? So if $1 billion of coin flows in and $1.5 billion worth of stable coins flow in, then this here will show a positive 0.5 billion, right? We're basically seeing that there is more stablecoin buying power flowing in. So what does this tell us? Well, right now we have something on the order of $3 billion worth of buying power flowing into exchanges in stablecoin denomination, and on net, coins are flowing out of BTC plus ETH. So what we're seeing here is exchange withdrawals at the same time as we are seeing stablecoins flowing in. Sounds a little bit like buying power flowing into an exchange whilst coins are getting sucked out in some instances by institutional level players. So again, these things can, of course, take time. These, I'm not saying that this is the bottom as a result of this one metric, but what I'm seeing is just a behavioral pattern of stables going in at an increasing rate after a period of outflows. At the same time, this looks like a bit of fear, right? Stables flowing out and BTC and ETH flowing in. Here is the exact opposite. So it's actually not too bad in terms of this overall reading. I believe that there is something brewing about a bit of a regime shift. I think psychology is starting to change at the macro scale. There's a few indicators very, very early starting to speak to this potential reversal of the tides. It takes time. It can take months even, but there's a few things pointing to this. Another one on that kind of view. This is the trend accumulation score by Cohort. Blue means that they're adding to their balance. Red means they're distributing. Yellow means they're essentially net neutral. Now, what we can see here is 10K, 1 to 10K, 100 to 1K. So these top bars are whales and large holders and retail down the bottom here. Now, October. Note how, the 10K whales are still distributing but softening. The 10K down to 10 BTC, which let's say this is the majority of people, right? Most people are not whales. There's a lot of shrimp, but they're obviously smaller buying power. This is high net worth institutions funds moving between 10 and 10,000 BTC. There's been a character shift. Something happened in October. Price went absolutely nowhere, right? We traded down the low of our current range. We're at the bottom end of it, 18 to 19K. And they transitioned from distribution slash neutral to a degree of, I'm just going to add to my balance just a little bit, right? These 1 to 10s are just kind of all over the shop. And even retail has kind of transitioned from an equilibrium phase. They were heavy accumulators back here. They've transitioned from a equilibrium into a bit of accumulation. Again, psychological shift. Something is changing down here in this realm. And I mentioned before this kind of lower bound, 18 to 19K. It feels like people are patiently putting their bids and just letting them get filled. So if we now look at our URPD, what do we see? Well, I see a really nice red triangle. I see higher volume being transferred and changing hands at the lower end of this scale. And I see basically the more buying and changing hands it happens, the closer we get down to this bottom level. Now, in terms of risks, there's clearly an air pocket between about 12,000 and our current price. That doesn't mean that we have to fill that in, but it does mean that very little supply changed hands in that realm. Here's buyers who, from previous cycles, we can more or less ignore them. They're all long-term holders. Who cares what they're doing, to be quite honest? Same as these guys up here. $50,000 to $60,000 BTC. If you haven't sold yet, probably not going to sell. So really, this is where all the action's happening. And what I'm seeing is a really nice support triangle forming down at this level. Now, obviously, the flip case is if this breaks, not so great. We'll see how that plays out. But this, to me, looks like a huge amount of demand. And I would also say that if people are stepping in and buying 18, 19K, they're probably, and they're an institution, they're probably not going to puke it at 12K. They're probably aware that Bitcoin's volatility is going to take them somewhere, right? Could be volatile. It's going to move from here. I would be surprised if these entities just puke out their $1 billion worth of accumulated BTC, or $500 million if we were to trade lower than that. They might, but I would put that into a low percentage chance. I don't think that dude who pulled out 42,000 BTC from Coinbase and put it into an institutional custody wallet is going back to that custody solution saying, hey man, quick, market sell, price sold down to 15K. I'm not convinced that's what's going to happen. So I like the shape of this profile. If some of you who've been here for a while remember me talking about us being top heavy, this chart, when we're at the all-time high, both in November, October, and in April 2021, this chart was the exact opposite of what we're currently looking at. This was up here at 60,000, and there was basically nothing down below us. This is the exact opposite of what we had back then. So to me, this shows support, not some kind of fear and, end it, Bitcoin's going to zero. This is telling me quite the opposite. In terms of supply, what we're looking at in terms of coins younger than 3 months, we are now at an all-time low of 13.5% of the total USD wealth is held by hot coins. So that massive triangle that we can see here, this contains less than 11.5% of the supply, but look how heavily concentrated it is in this price range, right? So what we're actually seeing here is that the hodlers are hodling to an enormous extent. All that blue supply that we saw before is at all-time high. Long-term holder supply is at all-time high. Coins older than 3 months is all-time high. Coins older than 6 months is at all-time high. Hodlers are hodling at the highest level they have ever hodled. Now, again, hodling is a review of what happened in the past. But what this is telling me is that a shrinking and shrinking and shrinking proportion of supply is available for purchase. We are seeing a supply squeeze brewing. When this thing goes off, it's going to be like a firework. There's going to be no coins left. This is essentially what we're seeing over the long term, is that these long-term price-insensitive hodlers simply don't care. They're not going to spend. They need a higher price for them to actually liquidate their wallets. And we will see this whole thing start to reverse when the bull finally kicks back in. But for right now, there's a supply squeeze brewing, and it's quite significant as far as I can tell. Then we can probably leave this guy. So the last one that I want to touch on is our long-term holder supply. Now I have two traces here. The first one in orange is raw long-term holder supply. Let's just read that first. We are at all-time highs up here, 13.8 million BTC. And this here is 72% of circulating. So, you know, that's kind of constraining how much supply is actually out there to be accumulated. Remember, this is up to 6 months, so you've then got a huge chunk underneath that to get us down to that 11%. But anyway, this here, note this vertical line. This vertical uptrend only happens when spending has basically gone to zero. Maybe I will just jump back to this. This is liveliness. The blue line being very low means that there's basically no time, no coin time being spent. What we're seeing is that hodlers be hodling. Low values of this means hodlers be hodling, and we are essentially at an all-time low right now on this. So with that in mind, you can see here that there's no spending going on by these long-term holders. They're just not afraid. They don't care. This thing only rips higher during those conditions. So turning that guy off, what I've done here is shifted this back 155 days. Why? Because what I care about here is where did those coins that are currently maturing in this massive upwards trajectory, where were they purchased originally? So you can see here that this line is roughly aligned with, this is where Do Kwon was talking big and buying all those coins. Then we sold off Lend Lunar Collapse, right? Poetry. Here, this line is showing all those long-term holders bought into Do Kwon's announcement through the Lunar Collapse and did not panic. So what we're seeing here is people who saw Luna implode. We will see over the coming weeks whether they held through this 20K drop. Some of them certainly didn't, but some of them most likely did. And we're probably going to see this thing push to even higher heights. So remember, long-term holder supply takes 5 months to respond. But that doesn't mean that there's not long-term holders holding those coins within that 5-month period. What this is telling me is that even though Luna came, went, blew up, and all the rest of it, a huge chunk of supply does not care. And this is showing me an extraordinary level of conviction. People have been beaten down. People who are holding their coins from 50, 60K, that's it. They're not selling. It's just not happening. Give me a higher price before I liquidate. That's my position. So what I see is a lot of people in that camp. I see a lot of support down here. I mean, it looks more bullish to me than bearish. There's no question we've still got work to do on the on-chain activity front, right? That remains lackluster. We really need to see that pick up, but it will follow a catalyst. Generally speaking, it will follow a catalyst. Miners are in a really tough spot. I would not be surprised if we don't start seeing some serious pain and liquidations from miners. If that creates some kind of narrative and wick down and catalyst, so be it. Beyond that, supply dynamics look remarkable. Coins keep coming out of exchanges. They're coming out by big chunks. 42,000 is no small gig. The Coinbase supply keeps going down in these big whale cost averaging type steps, and the hodlers are hodling. Now, there may not be as many of them. We may have a very small on-chain activity footprint, but those hodlers just keep on chipping away, keep on buying, and that supply squeeze is getting bigger and bigger and bigger. So anyway, look, what that kind of, if I was to summarize this whole thing, I mean, we're clearly at a decision point. Something's going to happen. This thing is going to move. When it moves, it's going to be big. There's a whole bunch of leverage in this system. There's a whole bunch of people who are bearish to the end of the world. There's a whole bunch of people who are probably going to puke out if we get some kind of flush out. And miners are going to deleverage at some point in time. But when all is said and done, this thing looks really, really primed to go up, to go higher, to do the March 2020 thing, to actually flush out and then move higher, or just rip higher and leave everyone behind, kind of April Fool's 2019 style. So anyway, that's my read on things. It's a really tricky market to read right now. But overall, I kind of like what I see more than I dislike it. So anyway, we will see how this plays out, and we'll keep you updated as things progress. Anyway, catch you in the next one. Cheers.